AS1001 Responsibilities and Functions of Independent Auditor. The objective of ordinary audit of financial statements by independent auditor is expression of an opinion on fairness with which they present in all material respects financial position, results of operations and its cash flows in conformity with generally accepted accounting principles. Means what is the general objective of audit? Objective of the audit is expression of an audit opinion whether the financial statements in all material aspects reflect the show a true and fair view of financial position, results of operations and cash flows which are as per generally accepted accounting principles. The auditor's report is the medium through which he expresses his opinion, or if circumstances require, disclaim an opinion, by which medium he can express an audit opinion by giving a report to the stakeholders, that is audit report. In either case, he states whether his audit has been made in accordance with standards of PCAOB. These standards require him to state whether, in his opinion, the financial statements are presented in conformity with generally accepted accounting principles and to identify those circumstances in which such principles have not consistently observed in preparation of financial statements of the current period in relation to those preceding period. The standard require him to state whether, in his opinion, FS are presented in conformity with generally accepted accounting principles. This PCAOB asks auditor to tell whether the standards are prepared as per generally accepted accounting principles. It also requires the auditor to identify those circumstances in which generally accepted accounting principles have not been consistently followed in preparation of financial statements of the current period under audit. So, distinction between responsibilities of auditor and management. Auditor has a responsibility to audit the financial statements and give expression. His responsibility is restricted to expression of an opinion on the financial statements. Management's responsibility will be primarily preparation of the financial statements. Auditor has a responsibility to plan and perform the audit to obtain reasonable assurance about whether the financial statements are free from material misstatements, whether caused by fraud or error. Auditor's responsibility is to obtain reasonable assurance. He has to obtain reasonable assurance that financial statements are free from material misstatements. Those material misstatements may be due to fraud or error. Because of the nature of audit evidence and characteristics of fraud, auditor is able to obtain reasonable but not absolute assurance that material misstatements are detected. Means the nature of the audit evidence, it will always be convincing but not conclusive. There are inherent limitations in audit. There will be few characteristics of fraud. That is the reason auditor can obtain only reasonable assurance but not absolute assurance. Auditor has no responsibility to plan and perform the audit to obtain reasonable assurance that misstatements, whether caused by errors or fraud that are not material to the financial statements, are detected. Means auditor don't have the responsibility to obtain reasonable assurance that the financial statements are free from misstatements which are not material. The financial statements means he don't have to worry about the misstatements which are not material. He don't have to perform the audit to obtain reasonable assurance that misstatements which are not material are present in financial statements. He simply don't have to worry about misstatements which are not material, because financial statements of a company, public company, it will be huge. What is material? We can say something which is material if that something affects the financial decisions of the stakeholder, then we can say that it is material. Auditor has to worry about those material misstatements, those material items in the financial statements. The financial statements are management's responsibility. Auditor's responsibility is express an opinion on financial statement. As I already said, preparation of financial statement, it has to be by management. Expression of opinion on financial statement, it has to be auditor. You people all know it. Management is responsible for adopting sound accounting principles, for establishing and maintaining internal control. Management is responsible for adopting sound accounting policies and for establishing, maintaining internal control that will, among other things, initiate, record, process and report transactions as well as events and conditions consistent with management's assertions embodied in financial statements. This means management's responsibilities is to establish, follow sound accounting policies, also establish good controls, sound perfect controls, which enables to initiate, record, process, report transactions as well as events and conditions. Internal controls, apart from initiating, recording, processing, reporting transactions, it does some other things also, which we will be looking later. The entity's transactions and related assets, liabilities and equity are within the direct knowledge and control of management. Auditor's knowledge of these matters and internal control is limited to that acquired through the audit. Thus, fair presentation of financial statements in conformity with generally accepted accounting principles is an integral part of management's responsibility. Means presentation of the financial statements has to be fair. That is responsibility of management, and it has to be in conformity with generally accepted accounting principles. This is implicit responsibility of the management. Independent auditor may make suggestions about the form or content of the financial statements or draft them in whole or in part based on information from management during the performance of the audit. So independent auditor can only make suggestions about the form and content of financial statements. He may also draft them in whole or in part based on the information provided by the management during the course of audit. However, auditor's responsibility for financial statement is confined to expression of opinion on them, whether those financial statements are free from material misstatements, whether those financial statements express a true and fair view of financial position, operating results, cash flow of such organization. That's it. And it doesn't worries about the immaterial misstatements, because only something which is material affects the financial decisions of the users of financial statements. Professional qualifications. Professional qualifications required of the independent auditor or those of a person with the education and experience to practice as such. Simply has to be CPA. They do not include those of a person trained for or qualified to engage in another profession or occasion. Okay. Independent auditor must exercise his judgment in determining which auditing procedures are necessary in circumstances to afford a reasonable basis for his opinion. There are many cases when conducting an audit where independent auditor has used to his own professional judgment. His judgment is required to be the informed judgment of a qualified professional person. Detection of fraud. Auditor should be aware of and consider auditing interpretations applicable to his/her audit. If the auditor does not apply the auditing guidance included in applicable auditing interpretation, auditor should be prepared to explain how he/she complied with provisions of standard addressed by such auditing guidance. Auditor has to be aware of and consider auditing interpretations, that is auditing guidance. If he does not apply auditing guidance included in auditing interpretations, he should explain how he or she complied with provisions of auditing standards which are addressed by such guidances.